Hey guys, welcome back to the channel. Today is October the 30th. It is actually Sunday afternoon, and I want to talk a little bit more about micro levels and actually how to trade them using the paired chart approach. I get questions or comments about it from time to time, and I want to kind of, I guess, zoom in more and be a little bit more clear and detailed about how to actually trade it, because I think people find that it's interesting to a strategy to actually use, because it is, it is profitable if you really know how to trade it correctly. So I'm not sure if you are someone that's new watching this channel. Maybe you're trying to figure out a strategy that may work for you, or you're just kind of struggling right now trying to figure things out. Maybe you've tried different strategies in the past and they just don't work. But this is primarily surrounding micro levels and actually how to trade them using paired charts, and how they can actually help you with giving you that extra means of confirmation when it comes to using the strategy and knowing how to use it correctly. So again, this is being able to trade paired charts together and identifying micro level structure breaks and being able to trade them correctly or day trade them correctly when price pulls back to certain zones, because it's all surrounding supply and demand. So you have to understand that's where it starts at. Is there a supply or demand zone or level to be able to trade from? And from there, it's basically you're using a higher time frame, moving down to a lower time frame, and looking at things from a micro standpoint, meaning a micro level standpoint, to be able to trade from. So I'm going to show you a couple examples. We'll mark the charts up here today. I'm going to start with the 12 range chart, because you get a lot more action, activities, able to see a lot more setups, and trade off of using two pair of charts. I don't trade from higher time frame charts. Now I always use a scale down approach and start with a higher time frame, my 60 range chart. And I say this in most videos. Some people may use an hour chart, a 60-minute chart, as their go-to chart for kind of depicting a biased direction of the market, or whatever the case is, and then using that step down approach, scaling down to a lower time frames. But I'm going to use my 12 range chart as my means of a higher time frame, which I do a lot of times when I'm trading. And we'll talk about, take a look at a couple of zones I'm going to mark up here and discuss with you finding and breaking down those micro level entries or trades that we can actually, that help us, I guess, in a sense, better give you means of a confirmation when you're actually trading. So, a lot of people, they'll trade from one chart, whatever the case is, looking for certain setups. But I always say you have to know and trade in a direction. So even though, it's the higher time frame chart may be saying, okay, look for entries to go long or look for entries to go short. If you scale down to a lower time frame chart and you look at the direction of the market, it can just be intermediate, maybe a short term time frame, and then scale down to a lower time frame. You're still kind of moving. You are definitely still moving in the direction of the market in a sense, because even though it's a short period of time, using, say, for instance, like a 12 range chart, or it could be a 5-minute chart, and then scaling down to a lower time frame chart for me, like a 4 range, which could be if you're a time-based chart a trader, maybe a 1-minute chart for you. As long as you're using this pair of charts just for that short period of time off the slightly higher time frame chart, say for instance, like I said, the 12 or the 5-minute chart, you are still short term and moving in the same direction when you scale down and take your trades from that lower time frame chart. So I'm gonna kind of clear that up a little bit. We'll look at that and kind of break down so you can see those micro levels and know how to trade them correctly, okay, off of the lower time frame. So let's take a look at an example here, and this is an example of demand. I'll mark it up for you right now. This was a low right here. If you pay attention, I think this was from October 27th, around pre-session before the market actually opened up. So we're talking like at 8:15 is where the setup actually happened. Look at the 12 range chart. So we made this low here, but we have structure right here at above 38.40, okay, or 38.39.5. And if you see price makes this low right here, it pushes higher and it breaks this area right here. First, you got to ask yourself what happened. Price broke structure right there, okay, leaving behind this area of demand. So we'll go ahead and mark up our area of demand off of the 12 range chart right here, okay, the zone right here, okay. So we got our area of demand marked up off the 12 range chart, and once we got structure break and area demand marked up, what do we look to happen? For prices to come back to the zone. Once price comes back to the zone, then we're going to move down to the lower time frame, and that's how I trade. Okay, I look for structure breaks. I trade everything surrounding supply and demand, but the biggest thing I want to see is, to give me more means of confirmation, is a couple set of rules. Structure break, leaving behind an area of demand or supply, whatever the case is. In this case, an area of demand. Wait for the pullback, and then we're going to go switch over to the scale down approach. Now, here we're on the 12 range chart. Now we're going to switch to a lower time frame chart. So right now, if we look at the direction of the market in a sense, on this particular day, I would say that, we see the market making lower lows and lower highs, right? Okay, so it's got more of a downward approach, okay? And looking at, if you had a channel, let's bring up a channel right quick. I'll show you. Let's just kind of channel this area off right here. You see that we're in a downward channel, making lower lows and lower highs, okay? Until we get to this area right here, even price made a low right here. But then it turns around, like I was stating, take that off, and breaks slight structure on the way back up to the upside, okay? It breaks its first level of structure right here at 39.5, all right? But still, my bias would be kind of short because we're only breaking a small area of structure right there. It's not like we broke this big area of structure right here, okay, which it would be right at the top end at 68. But because we've already started breaking structure on the 12 range chart, again, we're looking at things from maybe a short-term to intermediate time period, but we're looking to possibly maybe go long, a scalp long, just because price is broken structure. So we identify structure break on the 12 range chart. We'll go down now, leaving behind also an area of demand. We'll go to our to the 4 range chart now. So go to the 4 range. This was around 8:15, and price pulls back to that demand zone around 8:17. So still 2 minutes later. So if we look at the 4 range chart again, let's go to that area, guys. Let's go to it. So that was the structure break right there, okay? This was the area of the structure break, okay? The push up. So the demand zone will mark that we had. I'll tell you what, we'll go ahead and do this so you can see it off the 12 range. I'm going to go ahead and put this on all charts, apply, and okay. And now you see it popped up over here on the 4 range chart. So now that we have it here, price broken structure on the 12 range, creating an area of demand. We're just looking for price to come back to that area. Once it comes back to that area, we see it here on the 4 range chart. We'll scale down to a lower time frame now. All we wait for is a structure break. But this is the point to where you see on a lower time frame chart, this is what I classify. You're going to start seeing little micro levels, everything in between, like what you won't see on the 12 range chart. These little swings to the upside and swings back to the downside to this area of demand. These are little micro swings below. So when price comes back to that zone on the 12 range chart, you won't see this little swing right here in the 12 range. The 4 range chart. You're not going to see that on the 12 range chart. We don't see that. See that right there? We don't see that right there. That high, that little micro swing right here on the back end, that little high right there at 37.5. We don't see that here on the 12 range chart. It's not that, and that's classified as a little micro swing. But what we're looking for, once price again has broke that area structure on the 12 range, creating an area demand, and the price pulls back to the area demand, in which we're looking for a means of rejection to take a trade from going long, okay, we have to go over to that, like I said, that lower time frame chart. So once we get back to that zone, that 12 range demand zone off the 12 range, when it pulls back here, we have a little micro level here. And the next part of the setup, what we're looking for is we want to see a micro level break, okay? That means price breaking structure at a micro level, meaning, again, breaking structure, okay? Just how we did on the 12 range chart to looking for a setup. The setup starts on the higher time frame chart. In this instance, we're using a 12 range chart where it broke structure, created the area demand. Now that it's pulling back, we're scaling down to our lower time frame and we repeat the process in a sense. But in this instance, we're looking for price now to break structure, which is a micro swing level. Okay, so it pulls back to the area of 12-hour demand. 12 range demand, not 12 hour. 12 range demand. Break structure right here, this little micro swing. It breaks that area there at 37.5. Once price breaks structure, okay, micro swing on the 4 range chart or scaled down chart, all we do is again, we're going to mark now a area of demand on the 4 range chart now, okay, and that area could be right here as well as right here. Okay, the two small little areas of demand on the 4 range chart. Wait for the pullback now, and once price comes back to the area demand on the 4 range, we are definitely looking to take a scalp long. Okay, so This is price action coming back to price right here. We see it make a little swing low, a low here, a lower high, and then swing into the downside, tapping into these areas of the demand on the full range demand zone now. It gets there, and all we're looking for basically is price to react. In this instance here, a break of a candle above the body of this red candle here at 36 and a quarter, we go long. What are we aiming for? We're aiming for liquidity up here, but we also got to be mindful that there is resistance right here, okay? Resistance just right in this area here where price swung to the downside, moving back down to that demand area, all right? Price gets there, enter in at the break of the candle here at 36 and a quarter, and take the trade back up to this area here at 39 and a quarter, 3-point pickup right there. That easy on a setup right there of showing you how to use a scale down approach. Simply using a higher time frame, pairing it with a lower time frame. You're looking for the repetitive process of a structure break on the higher time frame, creating the area of demand, then scale down to the lower time frame. Price moves back to that area of demand off of that higher time frame, which was the 12 range chart. Once it gets back to that area, you look to see if there's a micro swing. Once it gets back to that area, switch down to your 4 range chart, or it could be a 1 minute chart. If you're pairing like a 5 and a 1 minute chart, whatever the case is. Either way, use coupled or paired charts. Move down to the 4 range chart for me. I'm looking for the same thing I just explained to you on the 12 range chart to happen. Is look for a structure break. That little micro swing area right there is the break of a structure on the 4 range chart now. Price comes back to it. Wait for the rejection, get a candle break, a zipper, meaning price making a W formation at the bottom, possibly one or the other. Once it breaks that area, go long, okay? Go long back into the next area of resistance or whatever's sitting above you. And you can scale maybe your first contract out here, see if you can hold it and, try to take profit as well at the top here where there's liquidity at. In this case here, price tapped out right there at 40, after you getting in at 36 and a quarter, pulls back. What do they do right here? On this pullback right here, they grab liquidity right here. Price didn't break. Well, it actually broke below this area, this red candle right here coming back. So it did make a new low here, but they turned back around and whipped that area out just to push it back up. And eventually it did turn around and hit that area right there, the area of liquidity sitting there. So that's just one example I want to show you of how to actually use paired charts and looking for the break of structure on what I classify as a micro swing off the lower time frame chart, following that step-by-step approach. Higher time frame, moving down to the lower time frame, looking for that break of structure on the micro swing, okay, or the micro level, okay. All right, so let's take a look here at an area of supply now. We're going to look at the same thing that happened, using scale down approach, 12 range, moving down to a lower time frame chart. Again, you could, using paired charts, you can use a 5 minute or 1 minute chart or whatever the case is, but always try to use two paired charts together to give you that double means of confirmation, okay? And we'll look at the micro level or micro swing, that structure break from the lower time frame chart as well, but we're going to look at the setup and of how it actually takes place, looking at, the area supply setting up, okay? So we see where price was making these higher highs and higher lows to the upside, okay? And made this high right here, okay? And we have a structure area, an area structure, which is an area support sitting right here, right below us at the high right here. So when price pushes down, pulls back, pushes lower, what does it do? It takes out this area structure right here, meaning it takes out this area support, all right? So we go ahead and mark our area of supply. For every area, anytime you see a price breaking an area of structure, either to the upside or downside, it's creating or leaving behind an area of supply or demand, or for the setup, okay? So there's a setup right here where price breaks structure, creates this area of supply, okay? Now what do we do then? We just wait for the pullback to this area. But also what I want to point out here is that we do have a structure break as well, which it creates an area of supply, but there's also a gap fill area here, okay? That means an area where price, aggressive selling that took place right here. I mean, when you start to see price move away from a swing real quick with a major push to the downside or upside, you got to think and understand who's doing that. And it's the banks or institutions that are trying to fill orders quick enough and get the market to move in a certain direction. In this case here, is what they did. You see how these red candles move to the downside. It's a lot of selling, aggressive selling that took place here, which means that there were probably tons of orders that didn't get filled. So more than likely, if price doesn't immediately pull back to this area, it leaves this area here with a gap or untested, which I also call it, the probability of trying to get into a trade when price pulls back and rejects the zone, it's going to be more so in your favor, because then you're going to be moving with the big players in the market back going short. So as a trader, we wait for the opportunity for those setups when we see things like that occur. Okay, price pulls back to this area of demand. There was a gap fill area here. Then you just go down and scale down to your lower time frame chart, the 4-range chart. Could be a 1-minute chart. However, whatever chart you use. Okay. Again, I use range-based charts. This zone here is that supply zone off of the 12-range chart, my higher time frame. That's not my highest time frame, but the two charts that I have paired together, I'm using my 12 range as my higher time frame now. But in these instances of using paired charts, so price pulls back to this 12 range supply area. Just as I said before, when we're looking at the area of demand earlier, we want to see a structure break, meaning price break a micro level or a micro swing. Okay, and then we want and that is on the 4-range chart, and then for us to mark the supply area on the 4-range chart. Okay, this is not the supply area that we're talking about. This is the supply area that we're waiting for price to pull back to from the 12-range chart. Remember, we want to see price pull back to the area of supply off the higher time frame, then look for the micro level structure break, and then mark our supply zone off of the lower time frame, the 4-range chart in this case here. So price taps back into that area. Little swings created on the moves to the upside here. Okay, we got a swing here, pull back. Little micro swings to the upside or micro level swings to the upside. Price breaks that first small little micro swing area right here. If you can see it right here, okay? Once it breaks this little area structure right here, go ahead and mark your supply zone up off of your 4-range chart right here, okay? And then you just wait for price to kind of tap back into it. Now, in this instance right here, when price broke structure, it pulls back. Small little area right here of pretty much one tick right there. I'm going to count that as price touching this zone right here, okay? We're talking one tick off of a 4-range chart. I'm going to count that, okay? And the moment I see price break, once it pulls back, it doesn't tap tick to tick into the zone. But if you get where price maybe is just 1 tick or 2 ticks away, depending on your style of trading, for me, that is I guess a key identifier for me to say, all right, price is 1 tick away. They're playing little games here, whatever the case is, but it's good enough for me, okay? Especially when I see I got price tapping into the supply zone off the 12 range, okay? Then I got price also making creating a gap in the market, as well as breaking structure on the 12 range. It's trying to do something. It is trying to accomplish moving back short or moving back south. So to me, I'm gonna count that once price breaks that little micro level swing right there, 1 tick away from tapping into the 4-range zone as as it happening, meaning that it actually is pulled back to that area. It's fine as long as I get that break to the downside below that candle right there. This red candle closing below the green candle right here, I'm going short. Okay, you may be asking, where am I trying to take the short back down to? My key area is going to be this area down here. This key area, this swing low right here. And the reason why is because if you look at the 12 range, we'll take a look at it. Now going back to it, blow it back up. Price tap into that 12 range supply area, right? Look below you. You have liquidity resting right here and liquidity resting right here. The aim is going to be first this area here, this low right here, sitting at 30 and 3/4, and then the next area is going to be here at 27.5. And price does that, taps into it, pushes down, hasn't quite taken out liquidity here, pulls back, pushes lower, takes it out, keeps on pushing lower, takes out the next level of liquidity. So your aim is going to be the lowest point right there I guess you want to say support, okay? When price moves to the downside, made this low here, then it pulled back, tap into that 12 range demand area, and then your aim is going to be down here once you got the break off of a scaling down to the lower time frame chart. You get that micro level swing break, structure break, wait for the pullback, and then go short, aiming for this low right here at 27.5. It's as simple as that, guys, okay? So I just want to show you in reference to when I talk about micro levels or micro swings, it's more so talking about those levels off of the 4-range chart, because you're going to see so many levels. Levels that you will see on the 4-range chart, you may not see on the 12-range chart, whatever the case is. And just showing you, when you pair those charts together and you see the last couple of steps is looking at the lower time frame chart to get into the trade once price pulls back to that supply or demand area, as long as you got that micro level swing break off that lower time frame chart and price pulls back to that supply or demand area, you look to take the entry, okay? All right, take the entry. So simple as that, you know. So just hopefully you guys found some value in the information in this video today. I wanted to kind of touch home on that a little bit more, go a little bit more into detail, and hopefully that clear things up when it comes to micro levels, trading around micro levels. I mean trading around those little micro swing areas off of the 4-range chart when you're coupling charts or pairing charts together. But that's all I have for you guys in this video. Anybody who's a new comer, first time viewer of the channel, if you're interested in joining our Discord community, I'll go ahead and pull that up now so you can see what I'm talking about. We have a great team on, community on Discord where we as traders come together and talk about the markets each and every day. We have a couple channels. You'll see we have a general chat channel, and that's more so talking about general questions pertaining to the future markets, okay? So this channel here is about anything pertaining to future markets, okay? Futures, all right? So if you're a futures trader and you're interested in joining a great team, or I keep saying team, community here on this channel, you can find the link to our Discord down in the description portion of the video, and it's free of charge. Click on the link. You can join. Again, we have the general chat section where you can kind of like a question and answer type form if you have questions about something pertaining to the future markets, and you may be, you know, trying to be on your journey of trying to learn how to trade or understand how to trade futures. There's a lot of traders. We have over 500 members that can, you know, on the Discord, and any one of them probably can answer the question. Not every one person has the answer, but somebody I'm sure will, with having over 500 members on the community. But just as well as that, we have a trading floor, and the trading floor is designed for us to go over, you know, zones and levels and share our trade entries. So we all come together as traders, futures traders, and we talk about when the session's open Monday through Friday, and we're trading, we'll post comments or make statements or whatever the case is on the trading floor about levels that we're looking to trade, or zones, or supply and demand areas. Maybe some people trade support and resistance, whatever the case is. Whatever zones and levels that people want to share, they can share. So anyways, if you're interested in joining, come and join us. The link is down in the description portion of the video. Again, you can, you know, kind of converse with people who are in your arena and share kind of the same idea of trading, meaning that it's share the same idea of the market that they actually trade, or markets they trade, that being the future market. So come over and join us. Again, that link is down in the description portion of the video, and it is free of charge. So outside of that, that's all I have for you guys. I appreciate you tuning in today, and stay tuned for the next video. Take care and have a great rest of your day.